So last week we talked about the Bitcoin ETF, the unprecedented nature of what's going on. And let's look at the charts that we looked at last week to look at the inflows. But tell me about what you learned about the what was that? The
Wirehouses.
wirehouses. Well, first of all, what's a wirehouse?
So wirehouse is a term that's used for the communications between multiple branches. So somebody like, Merrill Lynch or TD Ameritrade or somebody like that will have a bunch of different branches, and the customers of one branch can buy assets from the other branches. They don't all have the same resources and the same access, apparently, which is something I wasn't aware of. Again, I'm not a big finance guy, but
Yeah.
apparently right now, if you want to get into these Bitcoin ETFs, you have to reach out to the place where they're doing it, not necessarily the company that owns that ETF.
So me being like a retail customer that wants to invest some of my funds, I have $10,000, right?
Right.
So I want to go to Merrill Lynch right now. If they're not, they may not be able to help me, right?
Your branch may not be able to help you because their wirehouse may not be supporting the Bitcoin ETF yet.
Okay.
Or any of the BTC ETFs.
Mhm.
So because they aren't there, it's not available for them to check the box and say what you want.
Okay.
Then you would have to reach out to the office that's actually doing that in their company.
So that leaves people out because they're not necessarily going to do that. They want to work with their financial advisor they know and they've sat face to face and talked with.
But it also makes a whole lot of sense. If you think about it, everybody's worried about whether or not this new asset, this new ETF, is just going to do well, or is it going to up and down and crash? And, is it a rug pull and all this FUD that goes around it, right? But stepping into it carefully makes sense. Like I open the door, but I don't just say, hey, everybody come on in and trash my house. I'm saying I'm going to open the door and start looking at this and working on seeing that it has value, seeing that people do want it, assessing demand, the different kinds of things that you would do, as a business who wants to market a product. You're going to take the new guys and you're not going to throw them on the front page of your ad and spend a lot of money on their ad right away. But as you gain confidence in them and you see that there's demand for it, people want to buy it, you're going to start pushing that up from the back page to the front page.
So when are these wirehouses going to come online to be able to retail to buy in?
So I read that they were 1 to 2 months away. And then I'm in a group of people who are knowledgeable, and I shared that in that group. And somebody in that group turned around and shared back saying, oh, some of them are turning on next week.
Okay.
And if this is true, in my eyes, what they needed the people who are going to make the pitch, if you will, the investment advisors. If they don't know about the asset, they need a little bit of time. This is not an easy subject.
Sure.
So they're going to have to learn about a little bit about the ins and outs, the pitfalls of what a crypto investment looks like and how that relates to the ETF. And then they're going to have to be able to translate that to somebody who's less financially savvy, potentially, and explain to them why they don't want to put all of their stuff in this, or why 1% or a 5% allocation is right for your portfolio.
So that means that up to this point, even the big inflows, which we're going to talk about in a second, that we've seen, up to this point, or starting in the future, there's going to be thousands of new salesmen out there selling this to retail customers, thousands of salespeople, professional salespeople.
And if you think about what's going on is these funds have to train those people. Then those people are going to go out and start talking to their customers, their investors, and saying, maybe you should consider this. Maybe this makes sense in your case. Maybe it doesn't. And try to feel them out. Well, there's a lot of pent up interest, and Bitcoin's making the news. It's going up in value, and anything that goes up in value, like it's been going up in value, is valuable eyeballs. You're getting eyeball attention. And so that means people are going to be talking about it around the water cooler.
And these customers aren't necessarily, let's say, day traders. These are people that invest longer term. They're putting their retirement in it. They're not going to be pulling out in a week. They're going to be putting their money in there and it's going to stay.
Yeah, so far it's been,
not everyone.
Yeah, but so far it's been essentially trading for holding, for portfolio management, right? It's people trying to get a little in and then seeing if that outperforms the rest of their portfolio, if it helps bring things up, if it's
Yep. But this is important for
hedge.
our conversation is these people, this is creating a new floor price for Bitcoin. They're not going to be bailing out in 2 weeks, right? They're putting it in there as longer term investment strategy.
I think as we said previously, one of the bigger challenges here is how to represent how much of a sea change this really is.
Right.
This is a really big change.
Right.
I mean, the amount of money that's available to make the choice is so high
Mhm.
that even a small amount of those people making that choice is pushing the price up, and we can see that already. And they're just getting started. This is going to go on for months. Okay.
Mhm.
These inflows are going to go on for months because we're only beginning to hear about it on the other side of the table, right? In the crypto world, everybody talks about it.
Right.
In the non-crypto
Right.
world, they're not talking about it so much, but they're starting to hear about it,
Yes.
and it's coming up, and now the conversation is going to shift from the water cooler to the investment desk.
Right.
When you're sitting with that person who you trust, who
Right,
helped you
right.
make $100,000 into market 5 years ago
Right.
because you invested in this little tiny whatever that he was like, you might want to get a little of this.
It's not your friend's gamer son who's talking about crypto. It's not your investment advisor talking to you about
Exactly.
it.
It's somebody that you respect their financial mind,
Right.
and they've helped you in the past in their job. You're paying them to help you. And then they're turning around and saying, oh, you might be interested in this.
Yeah.
You might want to get a little bit of this.
Right.
And everybody's not going to be interested. There's going to be plenty of people out there that will be like, that's a big scam. I'm not interested, whatever.
Sure. Yeah.
It's fine.
Yeah.
Because if everybody tried to invest, I'd never get any more.
Right. It'd be gone.
It
It'd be $1 million Bitcoin.
It'd be unobtainium.
Right. Unobtainium. Yeah, exactly. So let's look at the inflows. This is the chart that we looked at last week. The zero line below it is selling.
Mhm.
And then above it is obviously acquiring the Bitcoin ETF.
Yeah. So all of these are either inflows or outflows. And
Yep.
below the zero is it's leaving the fund, and above the zero, it's coming into the fund.
Yep.
And you can see that there was some more balanced exchange over there where more expensive funds were deflating while others were inflating. But the overall trend that we see here is that there's significant investment. I mean, this line right here is $500 million. And in the last 3 days, there's been, more than $500 million in investment.
Yep.
That's a direct inflow. And that's not even the traffic. We're not talking about the velocity of this,
Right.
this asset moving around, which is in the billions, apparently.
And last week, our chart ended right here where my mouse is. Right.
Okay.
And so look what we have on the 27th forward. Let's just go right to the 29th. Let me hover over that. $898 million total inflow, right? And that's
just for IBIT.
no, I bet 612.
Oh, yeah. I got
So
you.
898.
Yeah.
Now, is that taking into account the outflow? I think
No, you got to go down.
So
here.
subtracting the outflow.
Go and look in here, and you can see this one's
minus 219, which
right?
is almost all just GBTC.
Yeah, but if you look up here, if you
Yeah.
look around the top of that, if you move off of this, you can see the top of it.
Yep.
This upper line is $1 billion. That was 900. That's pretty close to 900 million.
Yeah, it is.
So it's 900 million up, and then
Yep.
it's 200 million down. Right.
So still
that's why
net
you're getting that
700.
500. You're getting at 500 million plus a day for these couple of days here are big
Right.
wins. These
Oh,
are
it's
huge.
huge.
Those are huge. That's
That's
$1
huge.
billion in 2 days. $1 billion being invested in 9 different companies that are offering the same asset.
Now, isn't this one of the fastest growing ETFs in history?
They're record setting. They're beyond anything that any of the other ETFs have even come close to.
Okay.
Like 10x, 100x. It's crazy bigger.
What's the highest Bitcoin has ever been? 69?
It depends on where you measure and what the candle length is. So it's something on the order of $65,000 to $70,000.
Okay.
Depending on whether you're saying a day close, an hour close, a minute close, a close on an Asian exchange, a close on.
Oh, right.
They're all just a little
yeah.
bit different. Okay. So people are quoting different numbers to you, but
Yeah.
essentially over 65 and under 70 is
Okay.
reasonable to say we're right on the cusp of hitting all-time highs again.
So, but in the last week, we hit 62. 64. Then we hit 64.
Yeah.
Now we're down around 61, 62.
Mm-hmm.
But we're seeing these huge inflows. Where are they buying that? Without pumping they're buying it OTC, right? They're buying an OTC.
Yeah, as
from
we
the
said
liquidity
before,
pool.
it's typically it's a peer-to-peer type swap out of cold storage.
They're going to run out
Absolutely.
at these numbers.
No question they're going to run out. If you $1 trillion worth of asset,
Bitcoin.
And
right now.
$1 trillion worth of asset, and we're trying to buy $1 billion worth a day. So that's the entire asset in 3 years.
Right. Like 1% a day.
Yeah. It's more, it's ridiculous.
Yeah.
It's ridiculous.
Yeah.
It's 0.1%, right?
0.1%.
No,
$1 billion versus $1 trillion market cap.
Yeah. So 1,000 billion is $1 trillion. So 100 billion is a tenth of a trillion, right?
Yeah. 10%. So 10. So 100.
We're turning
you're right.
half of a billion. So
yeah.
Still the numbers
in one day,
regardless of whether it's, 1% or whatever, sustained inflow will strip any availability at the higher price levels as it goes.
Mm-hmm.
Because what you're seeing right here is, I don't care what the price is. I want some of that.
Right.
That's what you're seeing.
Right.
It's like, oh, hey, it's moving. Get me some before it goes away.
Yeah.
Let me get in on that and get my 10X, my 4X, whatever it is that they're looking for.
And we're still in a place where some people can't invest. Vanguard won't let their people touch it.
Well, we should talk about those guys.
Right. He's the guy in charge of that got canned, or he's leaving.
He's
medical leave.
Fall and he won't be back.
Right.
And Vanguard lost out on a couple $100 million a day since January 11th
in fees.
The writing is on the wall. An investment in their
right.
They got a license and then they didn't open it.
Right. So their customers can't buy in yet. Right. So this is happening without a lot of people having access.
Yeah. Yeah.
And they're going to get access.
Imagine that you're a Vanguard investor. Okay?
I'd be pissed.
You're in there and you want it, and
right.
they're just telling you, oh, well, we banned it. We own an ETF, but you can't own any of it, and we're not buying any in there. And
right.
Maybe you should go talk to BlackRock.
Oh God.
Oh, well, maybe
I'll
close
my account. Although those Vanguard guys privately are buying. Even though they're buying privately.
I think there's
How could
a
they
lot
not?
of financially savvy people who are buying.
Oh, hell
I think that's part of why you're seeing the numbers go up.
Yeah.
But that, past performance, not a representation. But what we're seeing is that as like the bear coming out of hibernation and waking up and looking around going, I'm hungry. I want to eat something. And what's around is some Bitcoin for some quick gains.
Right.
So this is going to go on for a while.
Oh, it's going to go mental. It's going to go crazy.
At some point, there'll be a euphoria.
Yeah, there will.
Because the price is going to shoot. I don't know if you saw, I don't have one handy, but I don't know if you saw how fast the rise has been. But in the last few days, in assets that are peaking up, like, Bitcoin made its run. It made like $3,000-$4,000 run in less than an hour.
Right.
Went zoom. Right. And this is starting to happen in altcoins. It's starting to happen in other places.
Rising tide brings up all ships, right? It's really starting to pump everything else.
What it's doing is it's drawing the eyeballs back again, and the people are
right.
Oh yeah, that's a great deal or whatever.
Yeah.
And they're jumping on things that they find interesting and pushing the price. But there's more players than there ever have been, because the people who left last time that the bull market left and the bear market came and people kind of left, they didn't like take their wallet out of their phone. They didn't give up on crypto per se. It just got less interesting. It wasn't going up. I'm not catching my eyeballs. So, I'm just going to not do anything with that right now. But now those people will slowly start waking up again and go, gee, I wonder what I had some VeChain back in the day. Hey, I still have some. It's worth something.
Right.
And then they're reinvigorated to be involved in the markets again.
Yeah.
Along with all the newbies that are coming.
Yeah.
And this stripping of the market of liquidity or potential liquidity for Bitcoin is only the first asset. We got ETH ETFs coming up in May.
Huge.
So huge. If that hits and does the same kind of thing as this, I suspect it'll help set this on fire again.
Right.
Because some people only consider Bitcoin the asset. Right. And other people are willing to invest in lesser coins.
Right.
Like ETH.
Well, but ETH is also ESG friendly for that crowd that likes that, being proof of stake. So it creates a uniqueness for that to pump also. That's going to come into play here.
Yeah, I think there's less pressure on that as the ability for those people to put pressure on crypto goes down as the market gets broader.
They just want money. They want to profit.
Well, yeah, I think people that are in the crypto, they're, some of it, everybody's different,
Right.
but in general, what I see is I don't see people trying to make a distinction between proof of work and proof of stake and all that, because brick and mortar is way up here and proof of work is way down here and proof of stake is somewhere less in terms of cost and overhead. So going to the bank and taking a 20 out of the bank is super expensive, man. They got to have an ATM. They got to have a
Right.
building. They got to have
Right.
security. They got to have employees. They got all this stuff that is around in all these different places, and every little podunk town has a bank in it.
Right.
Well, if that bank was in your phone, how much energy could you spend to secure the network?
Oh, absolutely. I get that. No, absolutely. That's true.
So
Proof of work doesn't take as much energy as what the banking system takes.
right. So that turns off that argument as people become more knowledgeable.
But it takes time for them to become more knowledgeable. We're getting
Yeah.
politics out of certain people's minds. It's not going to happen. Those hedge fund guys have to answer to their wives.
Well,
We're woke
gonna
and
go,
they get
we're
pissed.
going to go back around through the FUD and the FOMO
Oh, yeah.
and the YOLO and all of the different things that happened in the previous bull. All those kinds of things are all going to happen again.
Right.
And you're going to go and grab that thing that you don't want
Right.
because everybody else is getting it. And you're like, well, maybe I can make a few bucks.
Yeah, they're
on
going to
that
grab it too.
Obama,
Yeah.
Sonic,
Right.
whatever it is,
Yeah.
and then maybe you get stuck with it and maybe you don't.
Yeah.
This is investing at this end is a little different than investing in those kinds of things.
Yeah.
And what you're seeing here is professionals taking a hard look and seeing that there is promise.
Oh, yeah. Our videos are going to get real fun when that ETF for Ethereum comes out. And they're probably going to have an ETF for other ones too. We're probably going to see, and then you're going to see bundled ETFs for crypto, not just single asset.
Yeah, no, and I think that's the real promise there is for, because cryptos work in different industries too. There's gaming tokens,
Right.
There's DeFi tokens,
That's right.
There's DEX tokens,
Yeah.
there's
Meme
all these
tokens. You can
different
a
kinds.
lot of different things.
Yeah,
to invest in.
so you could go and get an ETF started and say, well, I'm only going to invest in things that are on Solana that are meme coins,
Right.
and be in this. But if I see a meme coin in there, I'm going to go get a piece of that,
Right.
right? And then whoever wants to be invested in that, they don't need a wallet, they don't need self custody, they don't got to worry about any of that. They just go buy some of your ETF.
Oh, yeah. It's just a matter of time before someone has an ETF that's Bitcoin, Ethereum, Chainlink, Solana, right? And investing a broad spectrum of investments in the crypto market. Wouldn't be the top 10 coins because a lot of those are stable coins.
Right.
That's that.
Well, and investments, personal thing. It's a highly personal thing. It's amazing. Some people I want money.
Right.
I don't care what the stock is. Other people are like, no, I'm in the aerospace industry and I know something about Boeing, so I want to hold Boeing stock.
Right.
Right. So as an advisor, I'm sure there's a lot of different ways that you have to cater to what your customer wants,
Mhm.
but still try and protect them. So it's a fine line to balance, right?
Right.
And this asset is in a different class of these things. So it represents a unique opportunity to diversify.
Mhm.
And that's why it should appeal to more than just people who are interested in aerospace or people who are interested in this asset class or this industry or segment.
Those investment advisors that got their customers into the BlackRock ETF or just any of the Bitcoin ETFs early on are looking pretty good right now.
Yeah.
They're looking
Well,
pretty good.
and there's another side to this, right? These ETFs, they start with a little bit of funding, right? They don't start like zero. They have to have some money.
Mhm.
So what are you going to do? You're going to go out and buy the asset. You're going to go out and say, hey, I should go get some of this because people are buying. Obviously people are buying. So I should get some more. Right.
Right.
So while the price is going up as fast as it's going up, they're making a shit ton of money.
Right. And fees?
They're buying Bitcoin at 48 and selling it at 49 because they didn't sell it for a day or something like this. You know what I mean? Like they're still chasing to catch up.
Cool.
These
The
the
funds themselves.
funds, they're making money by buying ahead because they're like, tomorrow I'm going to get a big investment again is my prediction.
Mhm.
So if I buy today for tomorrow, I'm a step ahead of the game and maybe I make some money in that process while the price is going up.
So the ETF can buy, they don't have to wait till they get investors funding it. They can buy ahead of time.
They have a fund manager, basically. They're an ETF. The ETF manager has to rebalance.
Right.
They have to move when the market moves. They have all kinds of drivers like that. They're going to have a certain amount of money that's part of how they get in and out.
Right.
They're going to have fees that come to them from the people that come in.
Well, that makes sense because if people are putting in 500 million a day, they need to anticipate that. So they're not buying it on chain very expensive. They're going to be talking behind the scenes, OTC, talking to miners, talking to Coinbase,
Plus, how many
because they have to anticipate this volume.
Yeah, but how many people knock on the door and say, I want to spend $100 million? Like, it's a conversation.
Rarely do I do that.
It's bad. Yeah, right.
Rarely do I do that.
It's a back and forth. It's, hey, I'm looking to, I got all these shares over here in this GE or whatever it is.
Right.
And I've been looking at this fund and I think I want to get into this fund, but, I want to get a lot. So I'm thinking about maybe $100 million worth. You know? That doesn't mean today I'm putting $100 million in. It means I'm signaling, I'm sending a message, right? So maybe over here somewhere, we're talking about me investing in it. It's not until here that you get my $100 million. Well, you knew it was coming. You knew I was coming. I told you I was coming. I said, I'm going to go liquidate that. I want into this fund, right?
Yeah.
So if you buy ahead of me while the price is going up, then you get that difference, right?
Right.
That's naturally yours because you're the one selling me the asset.
Right. I guess that makes sense. BlackRock just is picking one out of the crowd. They don't want to be caught short-handed and not have this on hand when people bring in a bunch of money. Like when these wirehouses start buying, they're going to need that. They're not going to wait till the orders show up to then go on chain to buy it.
Well, that puts them behind the curve, right?
Right.
The ideal would be you give my money, you buy the asset.
Right.
That would be the ideal. So there's the limited slip, right?
Yeah.
Like in a DEX, that's what you want to do is I want to swap asset with you and get that other asset. But you're quoting me a price, but that price changes between the time that you quote it and the time that I actually give you money.
Right.
That's slippage.
Yeah.
Well, they can make money on the slippage if it's moving the right way.
That's right. Right.
So if they're smart,
yeah,
they're probably hedging that. And they're also probably working it for these larger deals. If you think about it, if a teacher's retirement fund is not a $10,000 play, they're going to buy some, they're going to buy
numbers,
some, right?
Big numbers.
Yeah. No.
Yeah.
And then they're going to be like, well, I'm going to get 0.5%. Well, what's 0.5% for you? Oh, well, that's, $13.5 million or something like that. Oh, okay. Well, that's a significant buy. I'm not just going to go to Coinbase and go, hey, I'll take $13.5 million of Bitcoin,
right
off the spot.
Yeah.
No, they don't do those kind of trades off the spot. It works everything out of balance. And then the arbitrageurs come and they arbitrage the money away. Whereas Coinbase can keep the money if in line, if they can do the trade over the counter.
So in the past, when you look at the charts on Bitcoin, it'll go up to the sort of a high. And this has happened around the halvings. It drops back down a little bit. It's like people are taking profits, they're selling, it drops back down, and then it shoots back up again. That's trough, right? And it shoots back up again. So that could happen here. And so I'm saying that if we see it pull back a little bit, that doesn't mean the game's over. It's pulling back. People are probably taking profit and it's going to take off again.
I don't think it pulls back very hard lately. If you notice, we aren't getting the big swings we used to get. We're getting a big upswing, but we're getting a small downswing.
Okay.
So it's
which is where we're at now, right? It hasn't dropped. It's pumped up and now we're at that except the little drop down.
That's right. The little
drop down.
Yeah. But what would that mean to you? Would that mean to you that people are like, oh, it crested out and I want to sell?
Yeah.
Well, somebody sucked it up.
Right.
It's gone.
Now that's a question. You'll know this technical answer. The halving on Bitcoin doesn't happen on a certain date.
No,
it happens on a block. And that's speeding up right now because of this, isn't it?
No.
It's not getting I heard someone say it was getting quicker.
No.
It's not getting quicker.
No.
Okay.
So the way that the blocks work is it's an average of a block every 10 minutes.
Right.
And we change the difficulty rating in order to make it take 10 minutes to get a block on average. So,
so it stays at that 10 minutes.
So what happens is we have a certain amount of hash power to do the work of building a block and verifying a block. Okay. And that amount of hash power based on difficulty will take a certain amount of time to build a block.
Okay.
But over the course of a week or 2 weeks, the hash power goes up because people bought miners, they brought them online, hash power went up.
Mm-hmm.
So now it's not 10 minutes, now it's 9 minutes. They're saying, oh, it's happening faster. Not really, because we're going to turn and adjust it again, the difficulty to take that extra hash power and make it go back to 10 minutes.
Okay. So we're still around the April, was it mid-April?
Yeah, it's still in the April timeframe.
Right.
And you can't say exact because the updates and difficulty happen bi-weekly. It's every 2 weeks.
Mm-hmm.
And the average is 10 minutes. So the target for the average is 10 minutes. So it could be a little bit sooner or a little bit later based on how much hash power or whether or not blocks were found in the predicted time. Remember, this is a statistical game. So a block might not happen for 13 or 15 or 17 minutes or something like this.
Okay.
Because it wasn't found.
What do you mean it wasn't found?
Okay. A block solution has to be found in order for the block to be put on the top of the chain.
That everyone agrees on that solution.
Everyone has to agree on the solution, but somebody has to find this.
Right.
And everybody doesn't find the solution to a block to the same block
Okay.
because we get to add transactions from the mempool
Mm-hmm.
to a block and then offer that block up after it's solved as the candidate for the next block.
Right. Right.
First person to solve a block or first mine to solve a block
Yep.
that is accepted becomes that next block. And that is the miner who receives the reward.
Right. Okay.
Okay.
And then everyone else validates that.
They
solution,
validate
right?
that solution, but the validation of the solution is very quick.
Yeah.
The finding of the solution is the challenge.
Okay.
So all the different miners take and build a block with transactions. They put the transactions in a block and now they're in a pattern in the block and that comes up with a key, a hash that you have to find,
Mm-hmm.
right? You find the hash, your block is the first one and it gets into the chain, then that you're a winner and all those other people that did that same thing, but didn't find the answer faster than you did for their block, their block doesn't make it.
Mm-hmm.
All our transactions go back to the mempool and they start over again.
Okay.
Okay. So is it happening faster? It's possible for it to happen a little bit faster.
But then they adjust for that.
They're constantly changing the difficulty to fit the hash power.
Okay.
So as hash power goes up, difficulty goes up,
Right.
time per block stays close to 10 minutes.
Okay.
That's the goal.
That's the goal. So when the when it happens, the halving,
Yes.
what's going to happen to this? What's going to happen to these ETFs? There's going to be, some
in
people are
Bitcoin-
speculating it's going to be huge, but maybe not.
Yeah. I don't know that it has that much impact on this because this is,
They're not buying from miners, right?
this is like new interest in Bitcoin
Okay.
being used in another way, in a new way. Okay. The halving and the activity that happens around the halving has a history, but past performance is not a prediction of future performance.
Right.
Right. So you can't really say that, oh, we're going to get a big boom, but guess what? It sure looks like we're getting the big boom because we're coming in on the halving. We've got a bull market. It's gotten
Mhm.
started pretty solidly. Bitcoin's gone up really solidly and it's set to sky even higher. And so this is probably at least as much a driver as the halving.
The ETFs are pointing
yeah.
that. Just
Yeah.
right.
And what I see here is I see sustained upward pressure in the price.
Mm-hmm.
Because if you looked at this as total asset, what you're seeing looks like the side of a volcano. It's people investing every day.
Right.
Lots of people,
New people,
new people, not
not just
not-
crypto bros.
yeah, not your guy that you go hang out with, or not the guy that you talk to on Twitter about how the next big thing is something you never heard of.
Mm-hmm.
No, we're talking about people who don't really know anything about crypto. We're talking
Mhm.
about dads and moms and grandmas and grandpas who
Right.
have a portfolio and somebody's starting to whisper in their ear that they need a little bit of this weird thing.
And now they can get it safely.
And now they can get it. They don't
Without
they don't need a
keys
year custody.
and-
They don't need some self-directed Roth IRA where they can go and get the stuff and hold the custody and
Right.
prove. Yeah, what a pain in the ass.
Right.
Right? No wonder nobody's doing it.
Yeah.
Right? I mean, people are doing it, but this is not a mass adoption
No,
answer.
there's
like an
technical
ETF.
hurdles to get into
Yeah.
Bitcoin.
These guys, this is just a piece of paper that says I own so many shares of I
Right.
I mean,
Right.
that's beautiful.
Right. Yeah. Again, this is the easiest way to buy Bitcoin, and buying into micro strategies is another easy way, but this is a little bit more legit, more
Well, MicroStrategy,
is a,
you're still betting on the
the
company
company, right?
itself. Like they hold the asset, but is the company, did they
Right.
do well?
You have to trust.
There's a bit of trust, and there's trust here too. I mean, don't get me wrong, but in this case, there's an obligation to match the asset to the shares held against the asset,
Right.
right? So there's a fiduciary
Yep.
responsibility to manage that specific thing
Yep.
for the customer. And people manage millions, billions of dollars, trillions of dollars,
Mhm.
even in the US alone, for other people.
Right.
And this is now a way for you to take your crypto and have somebody else manage your crypto like they manage your
Retirement
asset.
fund, your Tesla stock, or whatever. I mean, just your portfolio.
Yep.
It's just now just part of your portfolio.
I don't know. It's very hard for me to look at it and not think that I'm not stating it loudly enough.
Hmm.
That this is unheard of. This is
Right.
absolutely unheard of.
Oh, we've been talking about this for years now. You and I, a couple of years now, we've been talking about this is nothing that's just changing the game.
It is changing the game for sure.